Zimbabwe's sudden suspension of lithium concentrate exports.
This is a time to be shipping.
My gut feeling is this is a reaction to transfer pricing. Is there any exploration upside outside the exploration target area?
There's definitely more upside. That's going to be some interesting work this coming summer.
Welcome back to Rockstock Recap. It is Thursday, February 26th, and today's discussion is going to center on what may be one of the most important lithium policy developments of the year, Zimbabwe's sudden suspension of lithium concentrate exports. This is a major supply shock into an already tight market. Zimbabwe represents roughly 6 to 7% of expected global lithium supply in 2026, and the language out of the mine ministry was unambiguous. Exports halted, including cargo in transit. Zimbabwe used to be called Rhodesia, and I'm wondering, is the country taking a lithium page from Indonesia nickel? Or is this a negotiating reset tied to transfer pricing concerns and beneficiation enforcement? Zimbabwe has been pushing for in-country value add for some time. Chinese operators like Huayou and Sinomine are already building sulfate plants. But the sequencing here is interesting. Indonesia industrialized first and then enforced. Zimbabwe appears to be enforcing first and industrializing second. Which raises key questions. How long can Zimbabwe forego export earnings? Is this a true 6% supply shock? Does this accelerate the emergence of a global lithium sulfate market? And what does this mean for spodumene pricing over the next few weeks, months, and quarters? We'll dig into all of that. Beyond Zimbabwe, the macro backdrop is also evolving quickly. The president's State of the Union speech explicitly linked AI, power generation, permitting reform, and domestic mining. And the House Energy and Minerals Subcommittee followed with hearings on a number of bills, including the Secure Minerals Act and the Strategic Resilience Reserve. The policy conversation in D.C. is clearly shifting from whether to mine to how to stabilize markets so capital formation can occur. At the same time, the Department of Energy just announced a historic $27 billion loan package, its largest ever, to Southern Power in Alabama and Georgia. While this is centered on natural gas, nuclear, and transmission, importantly, it also includes a battery energy storage component, which is worth emphasizing. Even the most energy dominance framed infrastructure package in recent history includes gigawatt-scale battery storage. This isn't climate framing, it's grid reliability framing, as we've been talking about for many months. Benchmark Minerals came out with new data on ESS, which shows the U.S. installed a record 57.6 gigawatt hours of energy storage in 2025, a structural signal that batteries are now grid infrastructure. Beyond lithium and BSS, we'll also touch on copper inventories, rare earths developments, and what this means for the broader hard asset rotation narratives. And on the company front, we are going to interview later today and at the back of this Rockstock Recap, Q2 Metals, which had another amazing set of drill results announced earlier this week. And Sigma Lithium and Lithium Ionic in Brazil have also rallied strongly following strong appearances at the BMO conference earlier this week. And Surge Battery Materials had very significant drill results at their Nevada sediment project. And before we dive in, just a quick reminder that nothing we discuss today is investment advice. We may own securities mentioned or have business relationships with the companies discussed, and all our listeners and viewers should do their own due diligence before making any investment decisions. This is just commentary and analysis for informational and education purposes only. Please read the disclaimer at the end of this video. And also, we'd like to thank our sponsor, USCF Investments, who've been making it easier to get exposure to commodities investments for almost 20 years. USCF's Sustainable Battery Metal Strategy Fund, ZSB, is designed to capture investment exposure to metals powering electrification, such as lithium, cobalt, copper, nickel, aluminum, and silver. To learn more, watch our inaugural episode with CEO John Love and visit uscfinvestments.com. And also Lithium Royalty Corp., which in December agreed to be acquired by Altius Minerals, a diversified royalty company based out of St. John's, Canada. Altius seeks to create value via a diversified royalty asset portfolio. LRC also acquired a 1.5% gross revenue royalty on the Goulamina project in Africa that is owned and operated by Ganfeng Lithium. All right, Matt, Rodney, let's start with Zimbabwe. Is this a short-term supply tremor or the beginning of a structural lithium midstream reset?
Well, I wouldn't say it's the beginning of a structural midstream reset. As you alluded to in your intro, Zimbabwe has been pretty clear about the fact that it wants, lithium miners operating in the country to go certainly into the midstream as much as possible over the last sort of 12 to 18 months to 2 years to 3 years, since mining has been taking place in Zimbabwe. And a couple of the miners are already developing those assets. So Huawu Cobalt and Sinomine, the Zhejiang Huawu Cobalt, and I might have murdered that. My Chinese is not great, but the Zhejiang plant is due to open this quarter, and it'll have capacity of 50 or 60,000 tons a year of lithium sulfate. And then the Sinomine plant probably isn't due to open until next year. There are probably 3 or 4 other mines that aren't integrated at this point in time. So I think the Zimbabweans have been pretty clear with the Chinese that they want them to go downstream, that they want to get industrial value add. But the problem is it's not that easy in Zimbabwe. I mean, Zimbabwe is probably short power, and it's short sulfuric acid and sulfur as well. So building a lithium sulfate plant just, doesn't make as much sense in Zimbabwe as perhaps it makes in some countries. So it's going to be very interesting to see what happens here.
Matt, my understanding was this, the clampdown was going to come at the beginning of next year, and now it's been moved forward. If some of the companies are in good faith already have constructed or are constructing, what do you think could have triggered them bringing this forward?
My gut feeling is this is a reaction to transfer pricing. We've seen in Australia, for instance, when the Chinese came in and took over the Bald Hill mine several years ago, they were selling the lithium well below market prices so that they could avoid paying some of the royalty. And I do wonder if that has been taking place to some extent in Zimbabwe. And then Zimbabwe government just put their foot down and said, look, this is not acceptable to us. So, I mean, and I can understand that the Zimbabwean government, would be upset if that was the case. Tracking the material that's coming out of Zimbabwe into China over the last sort of 12 to 18 months to 2 years, it is trading at a substantial discount to the prevailing CIF China price. So either it's lower grade or even the higher grade stuff is being sold at a discount. I think it's probably a mixture of both. I mean, we do hear that some of the Zimbabwe stuff is lower grade, it's 3-4%, but in low pricing environments, you're not going to move uber low grade stuff. It's not economic to ship it. So to some extent, there must be price discounting ongoing.
So, I mean, so simplistically then, if you are going to do beneficiation in country and then ship out a completed product or an intermediate, there is no argument over grade and discounting. Then it is a question of then, looking at international pricing and the Zimbabwean authorities saying that's the relevant price.
Well, you see, this is the really interesting thing, because in the spodumene concentrate markets, there is a benchmark price. But at the moment, there isn't a benchmark lithium sulfate price because nobody's really producing it. So in many ways, the lithium sulfate market is more opaque than the lithium concentrate market is. So it's going to be very interesting to see, what price they put on those sales, but to some extent, it will be a much higher price than they put on the concentrate sales, because of course it contains a lot more lithium than your average, 4 or 5% concentrate.
And if I were to ask you, Matt, then to assign a probability, if the miners and the government sit down around a table and agree a sort of a new standard or benchmark to what the correct pricing should be for spodumene concentrate, given grades and impurities, could we see the mines restarting and exports reflowing, and rather than having to wait until these plants are up and running and midstream is going?
I mean, my feeling is so, yes, because what country is going to want to defer or cancel that amount of export earnings? Obviously the mines are relatively labor intensive. The revenue generated by exports is substantial. I mean, it could be anywhere between 0.5% and 1.5% of GDP at current prices. So it's a substantial amount. I mean, I don't imagine it's really in the Zimbabwe government's best interest to disincentivize lithium miners in the country. I mean, that there can be more mining in Zimbabwe. There's more assets in Zimbabwe. There's more resources in Zimbabwe. So I don't think it's really in the government's best interest, but obviously it has to make, financial sense for the Zimbabwe government. And if the Chinese are effectively gaming the system, then I can understand why they've reacted the way they have.
So in other words, we could see this reversed and mines opening up again in the next couple of weeks if they reach some kind of accord.
Yeah, I mean, I would expect a slap on the wrist, maybe a couple of fines dropped in there, and everybody told don't do it again. With prices at the level they are for lithium concentrate at the moment, it's in the mining company's best interests as well to come to an agreement with.
That's my view. I mean, this is when you're meant to be making hay, so this is a time to be shipping.
Yeah, exactly.
It's interesting they did it now. I think Zimbabwe's looking at the GFEX price and decided to implement this at the current moment. But for now, obviously lithium stocks have rallied aggressively this week on the back of this news. There's always uncertainty. China is opaque. Lepidolite is opaque. The Africa, supply was opaque. And, but the Ministry of Mines in Zimbabwe actually published in English a very specific document, saying these harsh things. So we'll see where that goes. But it does, the sulfate market, has come about a little bit, or thought about. I don't know if that's what Pilbara is looking to build as a midstream product. There was a study done on DRC's Monono, I remember several years ago, focused on sulfate, and we've talked that it would be hard to just sell spodumene concentrate from landlocked DRC, so they'd probably do an intermediate sulfate product. But it just, is a sulfate market emerging? It made me wonder, with hydroxide not doing so well in Western Australia, right? Might some mines not try to go all the way to carbonate hydroxide, like the miners, right? Will more miners in other jurisdictions try to produce a sulfate product? And then will, like, the chemical companies, instead of, just taking raw spodumene, might they just do the sulfate to carbonate hydroxide step? I mean, how do you see that evolving? Right now, there's not, as you said, Matt, there's not like a reference price for lithium sulfate. There's not a global market traded like there is for spodumene and carbonated hydroxide, but it does seem like such a market's developing.
it has been discussed for a while by a number of miners, particularly those that have, landlocked or infrastructure constrained projects. But obviously, if you are going the intermediate step, you do need access to power and you do need access to sulfuric acid or sulfur. So it's not going to suit everybody. Obviously, in the DRC, you've got a number of copper smelters in that area in Zambia as well. So you potentially do have access to sulfuric acid. And you've got that hydroelectric power sources as well. But that doesn't mean that there is access to both of those commodities everywhere in the world. So while, going to sulfate in DRC makes a lot of sense, maybe, it doesn't in some areas. And then I think the other thing that's really interesting is obviously the move that we've seen from some of the brine producers in Latin America not to go all the way to carbonate. So a lot of the new brine projects that are coming through are going to export just lithium chloride. They're anhydrous lithium chloride. They're not exporting lithium carbonate. So, it's obvious that a reaction to the, high capex of going all the way down, but also, high opex as well. So it's very, I think it's a very interesting trend in the industry. And, your point about sulfate or hydroxide, your shelf life on sulfate is much, much longer than it is in hydroxide. And potentially if you're shipping material from Australia to Europe or the US or, from deepest, darkest Africa to Europe or the US, having quite a stable sulfate rather than a hydroxide that could go off in 5 or 6 months is definitely an advantage. But of course, if you are going to go down that route, then you need to have refining capacity in Europe or the US that can use sulfate as a feedstock.
Right. Okay. What do you guys know of the Indonesia example? Because they've banned raw nickel exports for a while, and they're now responsible for some 50. They've done it twice, I think, with nickel pig iron and then with laterite. So I don't have as long history observing that, but is this a replay or I guess power is a problem. I don't know if Indonesia had solved that power problem, back then, so are they trying to take a page from Indonesia nickel?
I mean, I think there's similarities within Indonesia nickel. Rodney, feel free to jump in. But I think there are similarities with Indonesia nickel, but it's not all the same. I mean, for instance, in Indonesia nickel, Indonesia's got a lot of coal, so there's a lot of coal-fired power in Indonesia, so there wasn't an issue with power at all. But with Indonesia, they felt, well, we're exporting a hell of a lot of our value add. We want companies to invest in value add in Indonesia. But the point that you made in the intro, Howard, is in Indonesia, they're putting in the entire value chain in Indonesia. So, they're putting in nickel pig iron, they're putting in HPAL, they're putting in cathode plants, they're putting in anode plants, they're putting in cell plants, they're putting in EV manufacturing plants, they're putting in downstream industries. So they're investing in the whole supply chain in Indonesia to try and keep that value domestically. Whereas in Zimbabwe, we're just not seeing that at the moment, and there isn't a market to the same extent in Zimbabwe for these end products.
Matt made a good comment there. I guess the issue is always in each commodity, where is the value trapped in the supply chain and what are you missing out on? So it's an interesting one, because if you look at what's happening at the moment with lithium, is a lot of the value is being trapped in the mining stage, not in the processing stage. So it's interesting that Zimbabwe is asking for this, whereas by comparison with nickel, it can be elsewhere in the process. So I guess it hinges around essentially what Matt's saying is, I think, is they're not getting their fair share. There's a transfer pricing, so they're not seeing it. But that is where the value is at. Australia fixed this. Remember, there was a bit of a glitch, not just Bald Hill. If I remember correctly, Albemarle had a bit of a run-in with the the guys at
Greenbushes, Talism.
In the Greenbushes JV, there was some review with the Australian authorities there.
Tax authorities, I remember that.
Yes, you remember that. So it's interesting that I guess for now, where the value isn't in the mid and upstream, that Zimbabwe's making this. So for me, it's a tax revenue thing. But again, Matt's correct. If you other than some transport costs, there is no natural hub anywhere near Zimbabwe to do any of the processing. It all mostly sits in China.
I think a difference here is like all these mines in Zimbabwe are vertically integrated with Chinese owners, right? This is not like Western Australia or Brazil, where there are Western companies that are treating mining as its own business with its own profit and, selling to Chinese off-takers. Is that correct? Like all of the mines in Zimbabwe are somehow integrated with Chinese owners, and therefore the Chinese owners would like to show profits locally rather than show the profits, at the Zimbabwe mine site.
Yeah, I mean, it's a good point, Howard. And if you think about it, is a lot of the transactions that happened in Zimbabwe was as spodumene prices fell. So there were sort of some costs that they couldn't offset, like transport, getting it from Zim to coast and shipped out and so on. So there was every incentive to keep the royalty, which is fixed on the value, down before they ship it out. And this is a thing that I raised previously, is in Western Australia, when spodumene was on its knees, but Western Australia was still demanding its royalty on the price when no one was profitable. So, I think we've seen a quick turn in pricing. So, the Chinese were trying to obviously keep costs down to try and break even across the entire supply chain, when lithium prices were below incentive pricing. But now things have changed, I guess. So, Zimbabwe's woken up to that reality and watching what the pricing is, sending it out. I guess, Matt, I mean, I don't know. Is there, I understand with each individual contract, when you ship the spodumene and you have impurities in grade, there are penalties, but there is no fixed term sheet across the industry.
No. And of course, everybody's shipping a slightly different grade, as you say, a slightly different impurity slate. But there is a fixed price across the industry. So, the SC6 CFR China price is kind of the industry benchmark. So everybody has a reasonably good view as to what the benchmark price is. And, it's easy to calculate, off that price, particularly if you know what the grade is of the material that's being moved, what the price should be, because the relationship is quite linear. Unlike in some commodities like iron ore, where the relationship might not be as linear. My question for you, Rodney, what do you think about the impact on the price? Do you think that we'll see other areas stepping up to the plate to offset this supply? I noticed that, Sigma is obviously coming back into production this quarter. We're seeing a number of companies selling stockpiles of fines or stockpiles of ore and concentrate that they built up during the bad years. Yeah, exactly.
I guess the interesting thing now, I guess, Matt, is what is the amount? So if we're talking 6% of global supply, then that's quite a lot to find hidden under the sofa, right, with the coins. But that's a full year. That's by year.
A full year.
So I think in the short term, you could probably draw down on inventories and have some of the other material come into play. I think if this persists for longer than 6 months, then that's going to cause that will reset inventory levels to some interesting numbers that'll make the market vulnerable to higher pricing. And then the question is, I'll throw it back to you is, we had this thing when we had prices at 80,000 and spodumene at 4.6 or 5, whatever, that did no one any favors in the sort of longer term, because everything looked like it, could potentially be viable then. So I don't think it would do the industry any favors if we have another spike.
No, I agree with you on that. And, speaking to people in China, there's very much the view that sodium ion has been gaining a lot of ground over the last 2 years and can, start to get substantial market share out of LFP in ESS and potentially two-wheeler applications, low-grade EV applications. So, yeah, I mean, if lithium prices spike, that's not going to do us any favors either.
I did see an article from a guy on LinkedIn about sodium ion being competitive now, being parity, I think. So, I mean, if that's true, yeah, your point is very valid then.
Yeah. I mean, obviously, it's not a one-for-one replacement because the energy density of sodium ion is so much weaker. So, you're going to be using much larger batteries. But you could see, more hybridization in cells or in batteries, whereby you don't replace a lithium-ion battery with a sodium-ion battery. Maybe you just replace a couple of cells in your lithium-ion battery with sodium-ion batteries or sodium-ion cells. So I don't see you're going to see, massive replacement, but you might see slower incremental demand for lithium-ion than perhaps many people are forecasting.
If I could just compare, and we'll put a pin in this after this, Zimbabwe to, let's say, the China lepidolite. There was one big mine, CATLs, but there were lots of others, right? And there was all this talk that, it's going to come right back on, right? But here we are many months later, and it hasn't come back online, and many of the others haven't come back online either. So here you have what is Zimbabwe's staying power? Yes, 1 to 2% of GDP is meaningful, but the biggest exports in Zimbabwe are gold and platinum, and those prices are doing phenomenally well. So, they're not in desperate straits. And then I don't know that this is, they negotiate with all 5 of them as one block. This could be, okay, YU, all right, you get approved. Sinomine, maybe you get approved, but maybe the other 3, if they're not advancing on sulfate, fast enough, or, the negotiation takes longer. The question is how long does this take? I mean, what's your estimate before we start seeing Zimbabwe spodumene exports? If you were just to hazard a guess, Matt and Rodney.
I mean, just to put some numbers into the market, China was producing about 21,000 tons a month of lepidolite. So in LCE terms, when the cattle mine was operating, and it's producing probably about 13,000 tons per month now. So it's about 8,000 tons per month gap. So, the bulk of the other mines are probably running quite reasonably in that area. I think, for me, I've said it, Rodney said it, it's in the miners' interest and it's in the country's interest to get the mines operating and exporting quickly. With the CATL thing, a number of things sort of came to the surface at once. So it wasn't just the mining license. There was also, environmental legislation that came in around about the same time. You've got this situation now where it seems like the tailings dam is overextended. They need to build more tailings management facilities, need to think about how they dispose of the tailings and everything, whereas this is basically a fairly plain we want more money situation, and that's easily fixed by negotiation, whereas the situation with the CATL mine was a number of operational issues and environmental issues which perhaps are not so easily fixed.
Right. Okay, let's put a pin in that, and we'll cover a few other things. But I think fundamentally this is it's been good for lithium prices, but spodumene producers in particular, Pilbara, Minres, Core, Alevra, Sigma, those producing have reacted most strongly. Also Lithium Argentina performed very well. So if you're producing, and a number of those companies I just mentioned were presenting at BMO this week, which corresponded with this. So that could be a reason for that. But companies like Core, who are monetizing stockpiles now, that's a very significant non-dilutive way for them to finance the restart of Finis. Sigma put out guidance actually for both stage 1 and stage 2 production, and then projects like Lithium Ionic, and maybe Wildcat, that are advanced development, projects are starting to be seen by the market as more likely.
I mean, I think for me, one of the things that continues to be very interesting is the run up in rare earth prices. So the Chinese rare earth prices continue to rise, and initially it was only the NdPr price, but more recently it's been the DyTb price as well, and those prices have moved really quite substantially since October last year, but the rare earth producers and the developers certainly haven't moved to the same extent. So you are sort of sitting there going, well, how viable is that? And, we know that we need to develop a Western world supply chain. We know that rare earth prices are rising. I mean, in fact, I understand that rare earth prices have now gone above the price floor that the US negotiated with MP Materials. So how come, we're not seeing the impact in terms of rare earth development stocks? Open question.
I've noticed some of my rare earths holdings have gone up. Brazil Rare Earths, I saw they also flagged yttrium prices are going up, as our tungsten prices have gone up a lot. There's been a lot of interest. I'm hearing and seeing and getting some inbound on tungsten. So some of these minor metals that are worth looking at, but we've been pretty absorbed with a lot of other news on lithium. I think we need to follow up on those in next episodes. Matt, you and I are going to be at PDAC next week, and we have a whole host of meetings Monday, Tuesday, Wednesday. So we look forward to recording a couple of snippets from some of our friends over there and having a read of what's going on there. I do have some sense that Canada was planning to make some announcements on critical minerals in connection with PDAC. So my eyes are peeled for any announcements of specific projects or government funding that will be announced there, and how this dynamic is evolving between Canada and the US, as well as Canada vis-a-vis China, right? Like with all of this warmth between Carney and China, could we see Chinese investment, in the lithium supply chain, like Ganfeng coming in and building, hydroxide plants, for some of the Quebec projects? I doubt that'll be discussed or announced next week, but I'm very curious to take the temperature as to whether or not, Chinese FDI into Canada will be welcome. Okay, let's leave it at that. And on that note, we talking about Quebec, we have Neil McCallum, the chief geologist, to talk about the excellent drill results and what's forthcoming in the coming months and quarters. And Matt will lead that discussion. Thanks a lot, guys.
Thanks for joining us. We've got Neil McCallum, head of exploration and director of Q2 Metals with us. And I'm going to give him a full in-depth interrogation on yesterday's real results and some other information.
Sounds good.
Thanks for joining us today, Neil.
Yeah, of course. Happy to be here.
Okay, so let's kick off. the holes that you released earlier this week have got pretty long high-grade intercepts that seem to go right through the middle of the deposit. Were you pleasantly surprised by those results?
Yeah, I think that with the pre-existing drill spacing of 200 to 300 meters, that does allow for some surprises in between, because that was an infill hole, like you said, right in the middle of the project. So yeah, definitely a nice, pleasant surprise, but it kind of nicely aligns with the hole next to it, the hole 18 that had a wide, I think it's 215 meters with a nice high-grade interval as well. So that's going to potentially lead us toward potentially a high-grade zone. We've got more infill to do this season to know exactly what that looks like, but it's a good start.
Excellent. Okay. And I mean, looking at the cross sections in the release as a whole, we're seeing, I think, how to describe it, quite a massive central section, which is close to the surface, and then a few thinner zones further out. That central area, that looks like a good potentially starter pit or an open pit, would you say?
Yeah, definitely. Like at the north end of the project, a lot of those intervals are closer to surface and a lot of outcrop in that area too. So that would make sense to start. And then way at the south end, a lot of those drill intervals encounter deeper pegmatite, but there is outcrop that we just haven't really aligned those up yet. So that there's a bit more work to do to the south to understand how those surface outcrops relate to the stuff at depth. But for the most part, that large, wide pocket of mineralization is, open pitable for sure.
And not a lot of water on the project area?
No, very little water. Definitely no lakes or streams anywhere on top of it, which is nice to have. It becomes a bit of a challenge in winter with water lines getting it, but it does make sense for us to have no surface water, which is nice.
Okay, great. And I mean, to confirm that you've now received all the assays for the MRE and you're targeting that at the end of the quarter, I note that you only drilled 74 holes for the Maiden MRE. So that's a pretty small amount of holes for a Maiden resource, is it not?
Yeah, that's right. It'll be somewhere around 33,000 meters. Like you said, it's a pretty low amount of drilling, low amount of holes. It all comes down to how much pegmatite each hole has. So each hole on average is about 30% mineralized. Compare that to other projects that have 10% mineralized. So that just leads to more drilling waste rock as you get into the ore zone. Can't call it an ore zone yet, but mineralized zone. So that is helpful for us. Every dollar counts at this stage where, public money, but it's going to make sense as we develop it in the future as well. It's going to be cheaper to get more infill drilling and more exploration too. It's going to be a lot cheaper.
Okay. And I mean, bearing that in mind, the sort of mid-range of the exploration target that you released last year would put this deposit already slap bang in the middle of the top 10 largest hard rock deposits in the world. Is there any exploration upside outside the exploration target area?
Definitely. Yeah, we have in that central area of the project where we've done most of the exploration, found the surface outcrops. It's roughly about a 2 kilometer by 2 kilometer area. There's a few outcrops that we haven't really defined where the roots of it are. So there's definitely more upside. And then when we look at the project, it's about 20 kilometers of greenstone belt end to end. And we're going to do some more advanced geochem sampling to understand whether there's more of these lithium zones across that 20 kilometer strike length. So that's going to be some interesting work this coming summer to add potential to the project, adding value.
Okay. Well, okay. That's pretty impressive. So how many rigs have you got on site at the moment, and what are your drilling plans for the rest of the year?
Yeah, okay. So we've got 4 drill rigs up on site. We are going to be drilling up to the end of April. Some of those rigs are doing hydrogeology testing. So it's not all exploration and infill. Some of it's that sort of development level studies in terms of understanding rock quality, hydrogeology. Those are all important things as we are heading eventually into the PEA study later this year. And then we've got summer work will be, just continued infill, continued, again, expansion and exploration drilling. But for the most part, it's going to be infill just so we can get a higher degree of precision on just how that pegmatite looks.
Oh, okay. And will you be doing more met test work alongside the sort of exploration work?
Definitely, yeah. We've got to understand, we've done 3 composites so far, which was relatively representative. We've got a bit more spreading out to do just to understand the variability, if it exists, of the spodumene across the zone.
Okay. And I mean, what sort of, are you seeing much variability at the moment, or is it all fairly consistent?
It's all fairly consistent, yeah. And we have done the mineralogical work to understand that it's all spodumene. You don't have lepidolite or anything else that can creep into other projects out there in James Bay. So that's kind of a nice aspect so far of this project. It's all consistently spodumene, consistently the same grain size, which metallurgists like to hear.
Okay. And I mean, outside the current sort of exploration target, which are the areas as a geo that you're sort of, cracking at the bit to sort of get access to and drill and explore a little bit more?
Yeah, I mean, it's an interesting project because we have kind of mapped out that central zone as one big blob, but we know that's not going to be reality. It's going to be a little bit more resolved. So that's going to be interesting to add information to model. But then just because like you mentioned, we've done such, it is early stage. It's a young project. It's only first drillable in 2023, right? So we do have a lot of areas where we could expand our current drill pattern to the north, toward the south, understanding how that looks. So there's a lot of areas I'm excited about from that exploration and upside potential, as well as like continuing to further define what we have already. So there's a lot of good stuff coming up this summer.
I mean, it's amazing to think that you have this exploration target, which already is a large exploration target. And then you've got all of this additional, areas that look really very, very exciting as well. And all, within a couple of 100 kilometers of the railway as well.
Yeah, that's right. It's like there's so many nice things lining up. Been on many different exploration projects over the years, and there's usually 1 or 2 fatal flaws or big hurdles. And this project, luckily, it has logistics on its side, geology on its side, size, and grade too. Hopefully we can continue to define some of these higher grade zones. So there's just a lot of good things coming from Cisco so far.
Okay, cool. And I mean, what are you looking to deliver in terms of catalysts the rest of this year? I mean, obviously you've got the MRE coming towards the end of this quarter. What are you doing sort of the rest of the summer? And then what's the sort of lead up to the PEA? When do you expect to have a PEA in the market?
Yeah, so we're going to be continuing with analytical work from this winter's drill program. We're going to be doing we'll release the results of the additional network, likely early summer, if all things line up, and then continuing, just to maybe find new zones. That's another catalyst. And then the PEA, we're expecting sort of that latter quarter of this year.
Okay, well, keep our eyes glued to that, and really looking forward to the Maiden mineral resource. Fingers crossed within the next 4 to 6 weeks or so. Really exciting.
Yeah, no, I'm looking forward to it, and I think we've got a lot of people waiting to see how that looks too.
Excellent. Well, okay, thanks very much indeed, Neil, and we look forward to the next time we speak.
Yeah, definitely. Okay, take care.